I guess, is Kayla for president, but I don't know which year Kayla will be running for president. But Kayla, don't worry, we'll vote for you. We'll have a female president in Nigeria. Good morning, everyone. Welcome to Business Morning on Sunrise Daily. So obviously, the United States election, the aftermath of it, is still very big in the news and conversations all around, even affecting oil prices. So we see this morning that oil prices rose following that sell-off triggered by the United States presidential election as risks to oil supply from a Trump presidency and a hurricane building in the Gulf Coast outweighed a stronger U.S. dollar. We had a stronger U.S. dollar since the day before and yesterday, and also higher inventory. So we see what has happened. We just almost 1% gain is what we see for Brent at $75.57 a barrel, 0.87% up. WTI 0.75% up, $72.23. And then when we look closely, we see normally for over a month now, we're having about $4 difference between Brent and WTI, but that seems to have dropped just a little bit, a tad. That's what we see there. But anyways, market mover is still incoming President Donald Trump is expected to reimpose his maximum pressure policy of sanctions on Iranian oil, and that could cut supply by as much as 1 million barrels a day. This is what the estimation and forecast is among the energy industry globally. Also, another factor now threatening oil supply in North America, Hurricane Raphael intensifies into a Category 3 hurricane. That happened on Wednesday, and about 17% of crude oil production, that's about 304,000 barrels a day in the U.S. Gulf of Mexico, had been shut in response to that. This information is from the U.S. Bureau of Safety and Environmental Enforcement. So another threat to oil supply there. The upside to oil market may, however, be limited to short and medium term, as OPEC is expected to increase supply capacity in January, while historical trends do not suggest that sanctions from Trump presidency on India and China would really affect supply. Come back home to the Naira now, looking at the trade of the currency, Nigeria's currency at the close of trade yesterday. A further drop on NFM, 0.62% drop for NFM yesterday, and that amounts to about 10 naira 33 kobo was shaved off NFM. So it opened at 1,671 naira 32 kobo, but closed at 1,681 naira 65 kobo. NAFEX is on the flip side, becoming a norm these days. Opened at 1,682 naira 5 kobo, but closed at 1,671 naira 80 kobo at the close of trade. We haven't heard of intervention from the central bank in the last couple of days. I think we haven't had any this week. Perhaps they're watching out on what suggestion the World Bank did, which is that there should be certainty on when we'll have central bank intervention or not, so investors and demand can follow the trend, so perhaps that's what they're working on. Now, the Federal Inland Revenue Service is assuring Nigerians that there's nothing in the 4 tax bills currently before the National Assembly which threatens the existence of any government agency or the jobs of individuals. The chairman of the service, Mr. Zaka Dedeji, who was speaking with chief executive officers of the National Agency for Science and Engineering Infrastructure and also the National Information Technology Development Agency, as well as the Tertiary Education Trust Fund at the Revenue House in Abuja, explains that the bills are provisions that will help in laying a solid foundation for sustainability and give various agencies the opportunity to focus on their respective functions rather than bothering about revenue collection. And still talking back here in Nigeria, we do see that the federal government says that it is set to sensitize small and medium-scale enterprises as well as nano businesses in Ogun State towards the stimulating economic growth, development, and poverty reduction. Achieving this through a town hall sensitization in Abuja, the state capital. They gave information that will empower and mobilize micro, small, and medium enterprises, as well as manufacturing enterprises in the states.
The interest rate, first of all, is 9%. There are no fees attached to it, no processing fee, no appraisal commitment. There are no fees attached to it. And you also have up to 3 years to repay the loan. And you have the first 3 months, you don't pay interest or principal, you know, and after the first 3 months, no interest or principal, you start paying interest from the 4th month up to the 6th month. It's after the 6th month that you start paying both the interest and the principal. So that's a way of making it easier for businesses to start off, to be able to get into production before they get into the pressure of having to start repaying the loan, because we know how difficult and expensive it is to acquire raw materials and run the business. And this opportunity is available to both new and existing businesses. So it's not a case of, oh, you must have run your business for 3-4 years or before you can access it. Even startup businesses can also benefit from the loan. Of course, existing businesses, if you're an existing business, would like to see that, okay, you have a sales record, you know, that you can show us to demonstrate that you've been in operations and all that. But even for startup businesses, we'll look at the potential of the business and, you'll be qualified based on that.
Now, the Nigerian Communications Commission, NCC, has held its 2024 annual workshop for judges on legal and regulatory issues in the communications industry, and it was organized in Lagos. This year's theme was the role of the judiciary in accelerating digital transformation in Nigeria. Yes, according to the Executive Vice Chairman and Chief Executive Officer of the Commission, Dr. Aminu Maida, is urgent given the urgency of scaling up digital transformation across Nigeria, as well as the importance placed by the government on improving coordination and synergy among key stakeholders to achieve more beneficial outcomes on its policies. Dr. Maida believes that the judiciary has a crucial role to play in achieving this.
Increasingly over the years, telecommunication infrastructure has suffered from disruptions due to extensive damage from vandalism and theft, fiber cuts by construction companies, to mention a few, and unfortunately even restricted access that prevents operators from servicing critical infrastructure. The industry has long called for special protection to be accorded to these critical assets to ensure continuous connectivity and reliable communication services. Ensuring and regulating Nigeria's digital transformation is not a task that the NCC alone can fulfill. It involves strategic collaboration with key partners, and the judiciary remains one of our most important stakeholders in this regard. A functional digital economy is built on investor and consumer confidence, which are impossible in the absence of the rule of law, a critical element that is supplied by the judiciary.
Now back to the big story of the day. We're still in that euphoria of a Donald Trump presidency in the United States and the impact on emerging economies. Let's have this discussion now with the Chief Executive Officer Managing Director of SI Capital, Mr. Olubenga Ogunipe, joins us here in the studio. Mr. Ogunipe, good morning. Good to see you in Nigeria. I know we met at Washington during the IMF World Bank meeting. Did you see a bit of the election? You know, of course, election started there. It's not like ours. Yeah. Were you able to go around to get views about the election, you know, before you left the US?
Good morning, and thank you for inviting me. Like you said, we met in the US and to cover the IMF program and the World Bank program. And then the following week is the US election. You can see the euphoria. Everybody was talking about it, what's going to happen. And then the results of the election has come and gone. And then it was a bit of a shock to many people to see that. Was it a shock
to you? Did you see Trump coming in?
Personally, it wasn't a shock to me. I mean, for someone that has been following the election the polling and everything, even while I was in the US, I had interaction with a few people, and what they said, you see that, oh, this man is coming back truly, because what the US citizens are saying is that while he was there in his first time, they were able to afford a lot of things. They were able to go to the grocery and buy things. Inflation was down. So they are really looking for him to come back and do that magic again. So, it wasn't a shock to me.
Well, anyway, a lot of people, even here, said that issues around inflationary pressures globally, which started with, apart from COVID, then we had the Russia invasion into Ukraine. That's a major one. Now you have the Middle East. He has promised that, perhaps he has a magic wand, and all of that will reduce. And we know that once those are being calmed, then most likely inflationary pressure globally would reduce. But how does that affect us back here home in Africa, emerging economies?
So, like you said, during Trump era, inflation was low, but as soon as COVID came, pandemic disrupted all economics throughout the world, and then government started spending, and inflation started coming. To an average people over there, they didn't want to understand that. All they know is that this man done some magic, so he should come back and do it. So we also see that for emerging economies like Nigeria, inflation was so high even after the pandemic, and it's coming down a bit now, it's subsiding, and then we expect that it will continue to, because the economies all over the world now are experiencing a low inflation compared to pandemic period and even before the pandemic. So it's going to subside. It's going to start coming down. It's going to prices will continue to come down. That's what we expect to see in the coming months. And then if government can accelerate those programs that they have put in place, and I think African economies will experience a low inflation. It's an economic cycle.
But it's not magic that you have Trump there does not automatically mean that African economies would begin to feel less pressure. For instance, we can expect a surging dollar, and a gaining dollar means higher debt servicing for us, affects demand on oil because oil becomes more expensive and all of that. So I wonder what you see that Trump can do, to help us.
The irony of it really is that Trump is America first. All his rhetoric has always been America first. So you wonder what is in it for us as a country, Nigeria, Africa as a whole. So it's kind of a bit dicey to see if Trump is going to help anybody outside America. So really, Nigeria and Africans as a whole, we need to now sit down and look at what can we do really on our own without having to depend on him. Because, but if you look at some of the programs that has been on ground, like the AGOA, the Africa Growth Opportunities Act, and then the pledge by the US to spend about $55 billion in the next 3 years in Africa, you see all those supposed to help us actually in sending our goods over there and lowering our tariff. But Trump has come to say, no, he's going to even impose tariff on some of these things coming from China, maybe Africa as well. So, it's a long journey for most of African countries going into Trump presidency. It's a bit unclear what is going to happen. Again, you mentioned from yesterday's result, dollar has started gaining strength. So it means investors will really even be looking at investing in the US economy, because a stronger dollar means it's stronger, your wealth is strong and everything. So it's going to be like an influx of investment into that economy. So we see less investment happening in Africa. We see Nigeria looking for FDI. During the October 1 celebration, the president mentioned FDI increased. We hope that trajectory will also increase. It will help our reserve, help our foreign exchange. But this is a new president coming in saying no, he wants everything to be America first. So it's quite dicey, going forward, looking at it.
Is there any policy, any hedge African countries, Nigeria, can be taking at this time? It comes in, I think, in January. Is there anything we should look forward to doing, that could be as a hedge for the economy?
So I think what we can do is now to begin to deepen our relationship with the U.S., especially the lawmakers and the diplomats in the U.S. and the rest. But it's also funny, ironically, the Congress, both the Senate and the House, seems to be going to the Republicans. So it means Trump is going to have a free road, free way for anything that he wants to implement. So we really need to deepen that relationship. We need to convince and let them know that to invest in Africa is even better, it makes them more prosper. African economy is largely undeveloped, so there is a lot of opportunities. So it's for any discerning investors, you can always see that the opportunities abound in Africa. So if they can get that message, they will come. But hey, we are talking about this man that wants to develop America first before any other thing. So it's, like I said, it's a tricky one. It's quite shall I say, unknown territory for most African
I guess it's also on the African countries to also look inwards and also, take care of their own, use your resources to develop your own.
Exactly.
After all, China did it.
Yes, exactly.
And now they can, almost stand shoulder to shoulder with the United States because they have developed.
The message that we should be preaching now is for Africa to sit up and develop their countries. We cannot depend no more on these countries to help us to develop our countries.
Well, I think Ukraine is the biggest victim in all of this. But anyways, thank you so much for your time. Chief Executive Officer and Managing Director of FSI Capital Investment Limited, Mr. Olubenga Ogundipe.
Thank you for having me. Thank you.
All right, moving on to other issues now. We're moving to our commodities space. And guess what? Since yesterday, I've been hearing some news in the background. Haven't gotten confirmation yet. Vito Group, Transfigura Group, and BPPLC, they're interested in some assets in Nigeria, talking about the oil and gas part. But thank God we do have Mr. Bismarck Rewane, Chief Executive Officer of Financial Derivatives Company. He has his way with information and is going to tell us more about this. Mr. Rewane, good morning, and thank you so much for joining the program this morning.
Good morning, and thank you for having me.
So what are these companies doing in Nigeria? What's the latest with them?
Well, Trafigura, Bitol, and Glencore have been partners with Nigeria for a long time. Basically, they're massive oil traders globally. Bitol, for example, is the biggest oil trading company in the world. Now, what have they been doing in Nigeria in the past? What they've been doing is that they've been involved in the swap for crude for refined product swap on behalf of the Nigerian government. So Nigeria exports about 400,000 to 500,000 barrels of oil, and in return receives the equivalent in refined products, i.e. diesel, petrol, kerosene, aviation fuel, and lubricants. That was the deal. Now, we understand that Vitol and Trafigura are interested in selling refined products of Nigeria across the coast of West Africa, in particular diesel for that matter. That's an interesting element because Nigeria, instead of exporting crude to Europe and then the European refiners exporting the refined products to Ghana, Trafigura is actually taking refined products from the Dangote refinery, ocean evaporated, and taking it into Tema, the port of Tema, the port of Freetown, and also the port of Monrovia. That is what is happening. So in terms of value for Nigeria, Nigeria is getting more value rather than exporting crude, now exporting refined products.
But Mr. Rewane, I did hear, perhaps it's not correct, that they seem to want to be like a competition to Dangote so we don't have monopoly, that they're also looking to enter the space of refining even in Nigeria.
No, I'm not sure about that. The refining capacity in Nigeria is already quite huge. You have 50,000 barrel, one single train refinery. You have Port Harcourt, you have Warri, you have Kaduna, and you have the, the modular refineries. So I think the situation is that these companies are interested maybe in buying the existing refineries. That may be one thing. The other thing is that they are globally they're traders. And so the fact that they own assets will not be exactly a strategic fit for their business. But you never know. As far as we know, and as far as we have heard, it is the first port of call is buying refined products from Dangote refinery, and the second point of order is to sell them across the coast of West Africa.
So do we have a timeline when they want to start this, and what impacts can we expect that to have on the price of diesel in the domestic front? Because, I mean, also exporting may become competition.
The time between when discussions are had and the final investment decision in the petroleum sector is quite long. There's a long lag time. So I would say if they are going to be purchasing assets on the ground here, it will take at least 1 to 2 years. But if they are purchasing products, then that will be very short. That's a matter of weeks. So whichever way, Nigeria benefits. If it's for products, Nigeria benefits short term. If it's for assets, Nigeria benefits both short term and long term.
All right, and then we see the price of diesel is now 1,150 for a liter. I mean, it's the same, yes. Almost the same with petrol, yeah. If not cheaper.
Yeah, as a matter of fact, the price of diesel actually dropped below that. It was about 1,020 naira before it went up. But because of the collapse of the grid, there's been massive demand by generator owners for diesel, and that has pushed up the price a little bit. But it is expensive. At the current price, if you buy 1,000 tons, 1,000 liters, you're spending more than 1 million naira, almost 1,100,000 naira. And that is expensive. What has happened, therefore, there's been a gradual but consistent shift from generator use to solar panels. The solar panels, you have to store the energy in batteries. So you have those long life batteries, which people are using. But anyway, the energy mix within the Nigerian corporate space, both in the manufacturing area and even in the offices, has moved more in favor of solar and wind, in other words, renewable energy. We've also seen some people using gas-fired turbines for their manufacturing process.
Mr. Rewane, what's going on with the Naira? I haven't heard of any intervention from the CBN, at least this week, but I do know that the World Bank had shared a suggestion to say to be better, and I know you have also expressed this a couple of times.
What we do know,
yeah. Go ahead, Mr. Rewane.
Okay, what we do know, I didn't quite hear that message, but let me have the question. What we do know is that the Naira is strengthening, the dollar is also strengthening. So normally if the dollar strengthens, the Naira weakens against it. But because of certain fundamentals that play in favor of the Naira, we are beginning to see the Naira appreciate somewhat. It has appreciated by over almost 100 Naira in the last week or two. And once December is approaching, the visiting friends and relatives, the cocoa harvest main crop, and now with the higher oil production, we are beginning to see some gradual but very slow spending on Naira. Our focus and our projections is that the Naira will begin to strengthen now, but will strengthen further towards the end of December and into January. So we are quite bullish about the value of the Naira. We do not think the Naira is now selling at about 1730. We do not think that's fair value, that's the misaligned value. And we think that Naira begins to strengthen. One, because interest rates are high in Nigeria. Two, because Nigeria is beginning the supply from the central bank is increasing. And we believe that once the central bank comes up with a program, which I believe they will do so very soon, then it becomes clear that if you don't get the dollar today, you'll get it tomorrow. If you don't get it tomorrow, you'll get it next week. If you don't get it next week, you'll get it following week. That way, the stampede of people buying dollars because they fear it will not be in existence will reduce. Once that reduces, then that premium that comes into the pricing of the dollar because of anticipated shortages will disappear. And that could bring the Naira down towards the range of 16 or 1500, 1550 for a dollar. Is that good value? For now, I can say it's fair value, but it could be better. Everything depends on the availability of dollars and the efficient management of the foreign currency by the central bank.
Yeah, but Mr. Rewane, it does seem like that projection of the Naira at 1,200 this year is gone.
No, I think so. For now, let's forget about 1,200. Because that's a pie in the sky at this point in time. But next year, sometime, maybe we'll begin to look at that. But so many things will have to happen. For now, we can forget 1,200 naira to the dollar, at least in the short term.
All right, Mr. Bismarck Rewane, Chief Executive Officer of Financial Derivatives Company, thank you so much for your time this morning.
Thank you for having me.
Just a little bit of how the market fared yesterday. We did see another drop in the market. It was down 0.57%. Is that it? Yeah, but I mean, we're still below the 97,000 at the close of trade yesterday. 337 billion naira shaved off, and still around 58 trillion naira at the close of trade. Activity chart was quite red. The volume was down more than 88%. Value down. Deals also reduced at the close of trade yesterday. Banking almost 1% in the red. Consumer goods down. Industrial goods had a slight positive there, and insurance and oil and gas. Still a lot of activity going on. And I told you about Unicell coming out of nowhere, making top trades, continues to keep that pace at this time. That's Unicell. And it did that yesterday. So that's why we see that positive movement in oil and gas. But I think, people are beginning to give attention to it. I saw some write-up and all of that at the close of trade. Now, we haven't done the fixed income market in a bit on Business Money. Let's see how that did yesterday. So for the federal government bonds yesterday, 5 deals worth 10.9 billion naira, and the most traded was February 2034 and June 2038. Long term, we see there, but of course for the treasury bills, it's always the short term. That's where the foreign investors normally. That's the treasury bill for the Nigerian treasury bills. We had also 5 deals yesterday worth 6.03 billion, and the February 2025 security was the most favored, as well as September 2025. For OMO, the auction from the central bank, they had more transactions yesterday. The deals 146 worth 558.88 billion naira, and we see the November 2025 security had 141 deals on it. A lot of transaction. That would be mostly in the secondary market, I guess. Well, at 1 p.m., Ladi Williams will be here with Will Ibong, so you get fresh market numbers and update intraday transactions in the market, as well as 55 minutes, or as part of 55 minutes of business conversations. That's waiting for you at 1 p.m. during Business Incorporated. I'm Mini John Meko. I'll head you back to Nelta and Kayla, who wants to be the next president, the first female president in Nigeria.